Buenos dias esa noche. This is London with Bitcoin Spike. I want to change things up. We're heading towards the weekend. We have our next trade for Bitcoin. Are you ready to trade? This is London with Bitcoin Spike. Hit the like button if you guys got yesterday's trade. What was it? It was a nice hit. Boom. Right at that specific. Guys, right at the specific. Let me lower the noise. Right at the specific 200 weekly. Who hit that? Guys, the VIP hit that top level of membership. Bam. Guys, 3% to the upside. And where did you have an opportunity to hit again? Bam. Guys, now I want to talk about the next pattern, the next trade. Let's go through this. We are in a bump and run pattern. We call it a bell pattern. They look like a bell. I'm going to go through the statistics so you're prepared to trade this pattern. Yes, we call them bells because they like to rock, boom, to the upside. Sometimes they'll rock to the downside. We'll go through the completion rates. We'll go through the structure. We'll go through everything in about a 2 to 3 minute video very quickly. Guys, first of all, let's go through the VIP and check it out. The trades today, 109%. 109% Vlad, my man. TA expert in the house, Pit Boss, a.k.a. Pit Boss. Nice trade, nice short. Way to go. Look at those charts. Now, in terms of Liam, brand new VIP, 266%. Boom, 122%. Both longs, nice trades. Arturo, brand new VIP, he's trading. Look at him, solidly. 88%, 24%. Way to go, Arturo. And Freddie rounding out with 234%. Yes, we cover the trades because, guys, it's what we do. Number one trade group. Now, yesterday I brought you this hit here. You know this. Not a doubt, you know this. Now, let's go through the bump and run stats, okay? Now, I'll tell you, there is a lead-in phase for a bump and run. You want to go to the 1 hourly chart. 1 hourly chart. This is the lead-in phase. I want to show you this lead-in phase. This is called the lead-in phase. Yes, there is a nice argument for a bull flag as well. Not without saying. A nice argument for a bull flag as well. I'll draw that in, and you guys know this is London with Bitcoin Spike, former hedge fund owner, private, non-SEC, and not financial advice. Now, on the lower time frames, the reason I'm excluding the bull flag has to do either with a deviation at this level here. Pay attention, guys. We'll cover an upside target for it. But the level of deviation here, or if this is dropped, I like a perfectly parallel channel when I'm dealing with a flag. I don't like a blow off top up and over an established level of resistance, all right, or a specific breach of that line of support. I don't like variable lines. I like a parallel structure when I'm dealing with a flag. Now, let's say before we get through the bump and run, let's just say that we look past that, and we'll go through a complication in terms of a specific, let's say a specific bit of gravity that we have on us now while we're maintaining quite well at the 200 exponential, no, actually simple moving average on the weekly. But yes, looking at the completion of a flag, where are we to go with the flag? I want the bump and run, guys. 26,564. That's another 14.43% would require us getting up and over this level of resistance. Boom, guys. Now, this level of resistance is going to comprise the bullish targets. I'm going to go ahead and say the best thing about a level of resistance is when you can hit it. Hey, the best thing about a level of resistance, when it acts like a magnet, you can hit it. You guys got that right. Don't always think negatively about a level of resistance. Now, let's go through the bump and run. I want to go through the features so that you understand. Now, in terms of measuring the bump and run, this is for VIP. You know, this is for nuestra gente, right? You guys speak Spanish. I know that you do too, okay? So some of you guys do. What's up, my friends? In terms of this feature here, okay, we have the expanding level of support, the expanding there with level of resistance. I want to identify any of these bump and runs, AKA, also known as bells. We rock them, boom, to the upside, guys, or bam, to the downside. We'll discuss some of the features with Elliott Wave in the future that can give you a kind of a tip-off that they may be heading down, all right? And in context, I will remind all of you, the specific move at the top, the specific bell at the top, before you get too bullish on all the bells, pay attention to this one. Yes, who called this one, guys? This was one of the biggest drops of the year for Bitcoin. Who called this? That would be yours truly. That would be me. Bam, boom, guys. Within 24 hours, a drop like you've been told about with Bitcoin. Look at this, ba-boom, 20, what is that, 26, almost 20, it's 27%, guys. Bam, yes, called that one to the downside. I called it to the downside. So when I'm looking for bullish activity or when I'm looking for bearish activity, that was bears in control after I called that double top. You got it, guys. After I called the double top on Bitcoin, then bam. So we're tough to compete with, guys. Absolutely. We have the #1 trade group. Now, in terms of the stats, let's go through the stats. Very important. Let's look at this. What we want to do on any bump and run pattern is the following. I'm comfortable with the hourly time frame right now. We're going to look at let's get off the 4-hourly into the hourly. That 4-hourly MACD has been sweet, hasn't it? When it picks up, guys, what a strong time frame. That MACD has been beautiful. Now, in terms of the amplitude of the pattern, I want the low to the high, okay? Not the high here, the low to the high. You're going to have to work on using your Fibonacci extensions. All right, if you guys aren't members of our VIP, you should be ashamed of yourselves. You should absolutely join VIP, period. Come on, man. It's serious. I'm not kidding. You should be ashamed of yourselves. Look at this, guys. The amplitude here of the move. Click 1 on the Fibonacci extension tool. Boom, at the bottom. You're going to drag up to the top here. You can float it over if you'd like to with the dotted line, float it over. Or you can click right here, float it up to the top of the pattern, and then you're going to want to draw it down. This would be click 1 at the bottom, click 2 at the top. Click 3 will be the point of breakout. Okay, now I have some statistics that go in line with the specific targets to the upside that are extremely important and exciting. All right, from the low to the high, bam, back to the point of breakout. Now look at this, guys. Pay attention. This is VIP. This is market intel. This is good stuff. Now, pattern top. What percentage of a bump and run pattern, the bump and run patterns, based on the entirety of the market data that's available and has been studied, what percentage of the bump and run patterns will reach the top of the pattern? 76%. Guys, 76% of the bump and run patterns will make it back to the top of the pattern. Boom. We like that, don't we, guys? We like those odds. Absolutely. Now, the percentage that reach half of the height of this, and this becomes more important when you have a longer structure. Guys, if you have 2 bumps, right now we have the lead in, we have 1 bump. If we were to have a second bump, guys, with a run, I was going to tell you, it's important to look at the half height versus if we were to, for instance, establish a lower trajectory. Let me pull this down. The specific lower trajectory through here in terms of filling out this pattern framework, you can start to see, okay, so the 50% would be in here. The threshold to the top of the pattern would be in here. Then we have our upside targets. Now, in terms of this is where it gets exciting. Pay attention. The percentage reaching 2 times the height of the pattern, reaching twice the height of the pattern. Okay, pay attention. The percentage reaching twice the height of the pattern. Boom, a 9% move to 25,000, depending upon the level of breakout. Let me actually adjust this. That would be the breakout at this level. Let me give it a little bit more credit. Let's say we were to break out just in fine fashion here. Okay, let's reject the breakout at this line. But 2 times the amplitude here, bam, let's call that a 10% move to 25.7 thousand. The 2 times the height of the pattern occurs 31% of the time. 31% of the time. I want to talk about a hidden feature in here. Pay attention, guys. Pay attention. All right, so 31% of the time we're going up twice the height of the bump and run. We'll take it. We'll take it. Now, 3 times, guys, pay attention. 3 times the height of the pattern, we're looking at 22% of the time. 22% of the time, we're looking at stacking on, in this instance, it would be a 15% move. Now, you probably wouldn't enter a trade and say, okay, well, there's a 22% chance it's going to do what I want it to do. But you have to understand the probabilities. You have to understand how they work together. You have to understand that 76% that we would complete back to the origination or the start of the specific pattern formation, right? You have to understand that 57%, as it would extend down, would be up to the 50% completion. You may want to change your Fibonacci extensions up a bit. Absolutely. You may want to screenshot. I'd say you may want to screenshot my Fibonacci extensions, and you may want to set up your Fibonacci extensions just like this, with the 1, with the 50, with the 2, and with the 3 completion rates to the upside. And you definitely want to focus on drawing those Fibonacci extensions from that low to the high. Click 1, click 2, then to the point of breakout. You're going to be green, guys. I would line these colors out to where you're differentiated on the 50, on the 100, on the 200, on 300 for bump and runs. It's just what I would do, guys. That is what it is. So now let's talk about what a throwback is very quickly. Once we break out, if we were to break out, let's say at this level, and we'll talk about the fact that 12% of the time, we're actually going to formulate a secondary bump. Let me clean this up a little bit. Let me move these words out of the way. I want to give you the statistics. How else can you trade the probabilities if you don't know the statistics, guys? You know this. How else are you going to trade the probabilities, right? Okay, in terms of this potential for a second bump. There we go. A potential for a second bump. Hey, 12% of the time we would go for a second bump. Very important, because if you're caught in this zone, you better be prepared to cover your position at a lower level. Bottom line, you better be prepared to cover this at a lower level 12% of the time. Okay, now a throwback is when we've broken out of the pattern, up and over level of resistance, we're up and out, and price throws back too. And it needn't be that big of a push out, but up and over. And let's say, guys, back to the level of resistance, a throwback to the level of prior resistance to confirm as support, or just back to resistance to potentially failure rate. Bump and run, I'm going to say on this between 9 and 18%. Okay, between 9 and 18%. And yes, you'll understand the need to incorporate broadening formations with bump and runs. We call them bells. I was going to tell you guys, we rock the bells a lot in the back. Huge trades by VIP. Very exciting. Guys, big weeks. Big price action on Bitcoin. I try not to feed into the hype, but it's just the truth. Guys, people are making good trades. I'm telling you guys, if you can be directional about this in terms of this specific level here, I mean, I did notify you, didn't I? Directly with an alert. Hello, boom. We are incoming at a target. Bam, 3% move. Last night again, bam, 3% move. Here, guys, I mean, I didn't need to tell you tonight, did I? Boom. So I'm bringing another pattern to your attention right now, along with the statistics. And the statistics, I'm going to tell you, have a little bit of weight on them. Just a touch of weight on them right now. Now, when I say something like that, it's not to couch anything. It's not to explain away, oh, well, London doesn't know what he's talking about. It's so that you know what you're talking about, okay? It's so that you understand what you're talking about. If I say something has a bit of weight on it, right, here we go. And just to be frank, just to talk with you guys, you're big guys, you know what you're doing, right? So that you understand what you're talking about. A little bit of weight. Okay, meaning what? Well, the first pattern in this series, the first real pattern, guys, unfortunately with the hit 1, 2, I'm going to say the 1, 2, 3 here, we did come in with this fourth hit into a bit of a rising wedge. Now, candle wicks are differentiated. The candle wicks have the bear flag, bit of weight there as well. But the rising wedge is definitely something. Yes, it's counterbalanced. It is counterbalanced. Pay attention to this, guys. It's counterbalanced by the notion of a parabolic curve. Okay, so we're trying to go vertical. I always say with a parabolic curve, we have two options. One is go vertical, boom, to the upside. The second is to collapse, boom, to the downside. The third is to do both, and we prefer both. Go vertical, bam, bump and run could play a nice feature in that. Let's get vertical, right? And we prefer that third option, which is go vertical and then, boom, collapse. So one is vertical on a curvature. Option one, go vertical. Two is collapse. Three is both. Go vertical and then, bam, collapse. That's what we prefer. So in terms of that rising wedge feature, that's adding a little bit of weight, a little bit of heaviness to the equation. We're reinforced right now. You know this. This is the crux. We're reinforced by that 200 weekly moving average. I am looking for a breakout of this pattern. These are strong patterns. I recognize the fact that while typically, and just pay attention, guys, while typically the presence of let's say a 12% likelihood that we would have a secondary bump feature down here, a secondary undulation, a secondary level below, about a 12%. I'm going to go ahead and say that I would at least double that. I would double that to compound the fact that we're over this rising wedge. I just would. I'd look for about a 25% chance of us going, boom, to a lower level. I'm prepared to trade. Obviously, guys, I've traded every level of this. Boom, boom. Stacked 1,000 coins. Bam. Equivalent of 1,000 coins at this level yesterday. Yeah, so you guys know we trade 1,000 coins. Do the math. 1,000 coins. Boom. Bam, bam. Nice hits, guys. So in terms of this level of support, level of resistance, I'm looking for a breakout. It's a solid pattern. I'm going to give it a quarter chance. Boom. That we're down and out. So I'm ready to cover my upside exposure with the potential for a re-entry and pounding into it at a lower level. Guys, very, very important. I will note that on the 4-hourly, this is important in terms of the descending wedge formation, level of support, level of resistance, that descending wedge on the macro, that we are on certain charts, i.e. Coinbase, we are within that formation. We have trajected back up into that wedge. That's good news, guys. That's good news. Now, with all of this said, I want to invite you to join our VIP. Why? Why, guys? Because we're in the back with charts all day long. We are literally with charts all day long, curated, just beautiful stuff, guys. Let's scroll up here, looking at the some of these just chart patterns, talking about decelerating trends. Let's say an accelerating trend. Boom. Let's say this channel formation to an accelerating trend versus what we pulled out today, which is the notion of a decelerating trend. The upward channel cutting over to the right, needing to hold support right now, or we're faced with a decelerating trend. This is the benefit of VIP. You don't pick up on it in the school books, guys, or in the funny papers. You're not going to find it. Now, join here as the #1 trade group. I'm inviting you for a reason, because we want you to be in our trade group if you want to beat the market. Okay, that's the bottom line. Hit this link or hit join on your desktop computer. On your desktop computer. Doesn't like Apple. YouTube does not like Apple. This link may help. It's on our Twitter. After you join, go ahead and put I am VIP. Boom. Guys, put I am VIP on the first pinned tweet. That'll put you directly in touch with me. And what will I do? I will set you up in your first hedge. Okay, guys, I promise I'll set you up in your first hedge. Remember, this is Lundo with Bitcoin Spike, former hedge fund owner, private, non-SEC, and this is not financial advice. But guys, it is what it is. I'm going to invite you guys to hit this link as well. This link is for BTCC. Now, we trade on LBANK. I'm also going to invite you to hit this link because BTCC is a purely 100% derivatives exchange. Okay, you get up to a $3,500 bonus here or more, depending upon your overall deposit. But yes, purely derivative exchange. Yes, guys, if you know your derivatives, if you want to learn the top shelf of derivatives, I'd expect you to want to see that exchange, the longest standing crypto exchange. the longest standing crypto exchange. They got it figured out, guys, amidst all these failures, etc. So I am prepared to trade the breakout, obviously trading this line as well. Congratulations to the VIP. This is London with Bitcoin Spike. Wanted to throw some music at you. And guys, we're getting ready for the weekend. Let's go. Let's go. Let's trade. Guys, this is London with Bitcoin Spike.